Good morning. It's April the 24th, 2017. Time to kick off our trading day with our usual disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. A mouthful for sure. We had our French elections. The status quo is preserved. Macron is forecast to win the runoff election on May the 7th. Right now he's polling 60% to 40%. Now the poll numbers were pretty accurate coming into this election, so people with this type of polling right here, people are pretty confident that Macron has won. The EU status quo maintains itself, so what we find is we had huge gaps in the markets that weren't open and running when the elections were taking place. And the dollar is down, treasuries are down, gold are down, stock markets around the globe except for China and Shanghai's market are up and up by a bunch. China's market is down because of the problems they're having with their shadow banking system and who's going to fail next. Biggest news out over the weekend for Europe, the German IFO Business Climate Index beat expectations. The Great Britain, it wasn't industrial orders, but it was similar to industrial orders, were down by quite a bit. Last month it was 9, or forecast at 9, and it came in at 4, so that was a big miss. So we continue to have economic news that generally is better than forecast, but we have news that isn't also. So that's where we stand. Okay, we've got this gap up here that runs from 25.24 all the way down, and then we have the gap up here at 29. So 24.29 is a gap, and it fills. We also have the fact that the excess quite often is in Globex. And you're dealing with professional market makers, trading desks, and when they step in, when they're willing to step in and buy it or sell it, and you can see this right down here, and we got pretty good support at 125.08, and we have a P and a P, so there's a pretty good chance the low is in, just because Globex tends to absorb the buying or selling associated with a piece of news, and it got high enough that people were willing to sell it, or it got low enough that people were willing to buy it. Now we usually have to go through a retest, so if the market has been up all night on these situations, you buy into the first break, and if you can't take out that high right there, you're out. You'll trade from the short side. So on treasuries, because they were heavily sold, and gold and the dollar, you're going to be looking, the first trade will be find a place to get short, and then if you can't take out the overnight session low, trading range and or higher. And that's the way that we'll play it. I'd like to sell 19s to 23s, but it may take a 15 to get in. Don't know. The sell might be 15 to 19. So I think this, I could live with a 19. The other place to sell would be 23 to 28, taking care, filling the gap in. And I'm not too sure we can do that. Second sell 27 to 31, that would be that play. On the buy side, 5 to 9, it's where support is. If the E-mini starts to sell, we're probably going to have to pay up. It may take a 13 to get in, and then 29 to 01 for buy 2. Today's news: Chicago Fed National Activity Index is called up 0.3%. No one will pay any attention to it. Dallas Fed at 15, the General Activity Index at 15. Those are the two pieces of news, and they usually don't impact the market at all. think over the weekend we had our last shot at a frost. We got down to 37, and I think so. The danger of frost is behind us now, and you could see it yesterday. Everybody was out buying plant materials and working in the yards, and it was a good day to get that done. Okay, looking at the 30-year. Number one resistance is going to be the buck to 04. We got this low over here basically in the 8 area, so 7 to 11, sell 1. And then we've got the gap all the way up here at 29, so 23, 27, sell 2. We'll jump it up there. I don't think we can get there, but I mean, you never know. With 100% certainty, 20 to 24 is number one. So 13 to 17 buy 1. 1 to 5 buy 2. Tomorrow's the 2-year. Wednesday's the 5-year. Thursday's the 7-year. The auction tends to support prices, holds them up. So I'm pretty comfortable buying the low end of the range because of the auction this week and how it supports the market. Not going to do it with resting limit orders, but because of the auction and because of the phenomena that's quite often the Globex session sets the high or the low. If we get our setups, we don't have to be afraid to take them. Okay, gold just got smacked. Hey, the euro has been preserved. It's intact. No need to own gold. And it was sold. I like the 65, 67 area. So 60, 65. We've got a low volume number at 62.40. We don't have a gap right here. So there was the opening. There was the first half hour's low. So we've rejected prices below 69. So let them retest that area, 65, 67 by 1. And then 59, 61 by 2. Not as comfortable with the 59, 61 as I am with the 65, 67. I think if we take out 65, probably headed for 1250 over a couple of days. Okay, on the sell side, we've got volume at 73. We've got an end period high at 74, so 73, 75, sell 1. 78, 80, sell 2. Picking up that spot and that spot. So just kind of leaning against support or resistance or high volume numbers. What we normally do, no magic there. The euro, I think we 109 plus. I glanced at it this morning. And there's no reason not to own the euro and the rest of it. The euro is intact. Yeah, we got up to 109.25. Down 108.72. So I'm going to assume the high is in. Definitely dealing with a B here. And this euphoria was set on the opening. People playing it. And we're notching lower right now. So 109 even, sell 1. 109 1/4, sell 2. Okay, England is leaving the European Union. And looks like France is staying. But the problems that the European Union face, like who's going to pick up the tab for the southern states and probably for France, remains. So we'll try to go for the edges at 108.50 by 1, 108 1/4 by 2. Okay, crude oil up a bit. The European Union is preserved. The economy is great. Looking at crude oil, the fundamentals remain weak. So these single prints, and remember, we usually get about 50% into these single prints. So a limit sell, if you want to put a limit order out, halfway into the single prints is not a bad idea. And you'd have left a little money on the table, but not much. Dealing with a B overnight, we had this spill. So this 50-50 area, 50 and a quarter, is pretty stout resistance, and like 49 and a quarter, 49.50 is where support is right now. Put all this together, we're still dealing with B's, so the first trade is a sell. So 50, 50 and a quarter, sell one. 50, 50, 50, 75, sell two. I don't see what the French vote is magically going to increase demand and turn the supply-demand situation around in crude, at least not quickly. So not afraid to sell it. I'm going to put a question mark at 50. I think we can do a little bit better, but it might take a 50 to get in. So 49 even, 49 and a quarter buy one. And then 49.50, 48.50, 48.75 buy two. Not going to be too hard to get back and retest that low at 47. And the E-mini, which has exploded to the upside. What a great day to be in stocks. Okay, when we put a high in, if there's not an obvious piece of news, for this to be the high, it has to be retested. So traders are working the markets, but the great big large institutions are not just yet until this is retested. If that's retested and holds, you're looking at a trading range and or lower in this situation. So just coming across, you can see that we're probably this 2275, 2300 is probably pretty good support, and then 2375, 2400 probably pretty good resistance. And we're in a position to retest this high. We've been waiting for a retest before we'd call anything other than just a trading range. Everybody's predicting, like they have been for the longest amount of time, the bottom falling out of the market. Now, big correction. The optimists are 10 to 20%. The bears are 50 to 60%. And who knows, we'll win that one. But that's where we are. So we've got this gap. So buying against 60 is probably 56 to 60 right here. A resting limit order would probably be the best way to approach this. As it stands right now, 65, 67 would be buy one, and then 61.59 would be buy two. I think the easiest trade to see is going to be failure to take out and hold 23.75. So we'll put a sell failure right here, and then a 79 to 84. It's going to be, if we catch a lot of people, I know it's pretty wide and pretty broad, but if we catch a lot of people short, we could get up and get running, and we should know that pretty shortly after the day session opens. In fact, most of those people will bail on the opening if they are institutionally driven, and if they're retail accounts, they're gonna, I can't pay this for that, I'm gonna hang on and wait for a little bit. They'll compound their problems. The whole secret to trading successfully is discipline, following your rules, limiting your losses. And if you can't do that, you're not going to succeed at this. And the large institutions have figured out, they don't care. I mean, if they get a surprise on an earnings report or a piece of news they don't like, they dump the whole position, unless it's a core holding. And a retail account won't do that. They'll try to minimize their losses, and they compound it. Okay, it'll take a bit to get everything up and posted. I'm going to get busy on that. Back with you as soon as possible.